Few things we're seeing at this minute. Those of you who are actively trying to buy businesses already know that the holiday period is pretty slow. What is happening now is people are coming out of their hibernation, and generally the business buying process mirrors like the farming seasons. So what I mean by that is a lot of deals will come to the market in the early spring. You almost think of it as farmers planting seeds. And it's very common for the majority of deals to actually get closed in the summer, fall, and then that last couple of weeks before the end of the year is when deals close at a really lightning pace, because incentives are such that bankers and brokers want to close the deal before the end of the calendar year so that they can get their bonuses. So that's basically how that process works. But what you'll see now is, whereas last week or 2 weeks ago, before the end of the year, it was hard to get a hold of a broker, it was hard to get a hold of a banker. Now the whole landscape resets. The beginning of the year is a reset. And now it becomes a lot easier to get a hold of them because people are thinking, okay, last year's commission was last year's commission. Now I need a new set of buyers, a new set of deals. Bankers are thinking the same way. Okay, last year's deals were last year's deals. It becomes a new thing. So it's very common as tax returns get filed for, now in this case 2023, tax returns will start getting filed in February and March. You're going to see a lot of deals come to market by the middle of Q1. And then naturally, as we roll into Q2, some of those deals start getting closed. I digress. I see Morsi, Mr. has a question. Those of you that are just listening in, mute yourself if you don't mind, just so that the static doesn't mess with the stream. If you have questions, use the hand raise feature. And Mr. Morsi, I think you're raising your hand. If you have a question, let it rip, and we'll discuss or a comment.
Thank you, Mr. Rogers. I just want to say, first of all, I really appreciate all the free value that you give out there, and I appreciate your punctuality for this call.
Yeah, I aim to be on time and to just be candid about what I know about buying businesses. How can I help you, or did you have something you wanted to comment on, or you tell me?
Yes. Yeah. So my comment is on deal flow.
Yep.
I'm currently doing deal flow, but I'm in the home care sector of healthcare, and I've done probably around 1,100 cold calls. And my question is, whenever you were going after your first deal, I'm sure you did thousands of cold calls, but I'm sure you felt the fear of, if I run out of these lists, like maybe I won't find a buyer.
Right.
Maybe I won't find a buyer, but how did you move past that fear? Because I'm starting to feel that, like, how many calls is it going to take? Am I going to find one? I'm going to run out of people to call. You know what I mean?
Okay, so a few things. Let's talk about deal flow. I'll answer your question directly, but then I'll also answer kind of the implicit question, which is generally, how do I find my first deal? By the way, if you would mute yourself, I'm hearing folks having great conversations in the background, and so are the other 50 people or whatever that is that are here. So keep your conversations to yourself. Mute yourself if you're not talking. It's not about censorship, just about keeping a quality stream. Okay, so a few things. Number one, if you are going to cold call, first of all, 11,000 dials is impressive. So 99% of people.
No, 1,100.
Even still, it still is better than probably most everybody here. So fair play. A lot of people just don't dial. They go through the broker route, and that's that. Okay, so let's first talk about smiling and dialing. Those who are in cold sales know this, and I have a background in that world from a different life. Almost always, it's going to be on your second or your third or your fourth attempt to get through where you're actually going to break the fourth wall and have a meaningful interaction. People who are in sales know this. It's very, very common. First time you try to reach out, crickets. Second time you reach out, crickets. Third time, maybe. Fourth time, more likely. In marketing, you hear kind of this idea of you need 7 touch points before, the customer's actually going to do business with you. It's an average. It's not a science, right? But I want you to think about the fact that even if you had a list of 5,000 people and you called all 5,000, right? That doesn't, and nobody was interested in doing a deal with you. That doesn't mean that none of those 5,000 people ever would. And I know that may be terrible to hear. You're like, oh my God, so I have to do 20,000 dials? Well, not necessarily. It shouldn't take you 20,000. I would actually rather take your 1,100. I would dial those 3 or 4 times, so at least they know you on a first name basis. I mean, my question, I don't want to go too far into this because I think I can give you enough here, and then also talk about on-market deal flow, which I do think you should be flirting in both off market and on market into your game. So I want to talk about that in a second. But the part two to this is just, as opposed to going through your whole 5,000 person list or business list, I would work your 1,100 and try to get to have at least a handful or a dozen or a few dozen of those business owners who are at retirement age, know you on a first name basis, hopefully get a cup of coffee with them or have a phone call with them. Like, double down on, go deep as opposed to wide. I mean, the idea of buying a business is you only need one business owner that wants to do a deal with you, right? So it's not like we need everybody to know of you. We need 10 people to like you, to say, I want to do a deal with Mr. Morsey. So that's part one, is I think, don't worry about, I went through 1,100 people once. You're just getting started. Go deeper as opposed to wider. That's really important. You need that personal first name kind of relationship, and you only get that by kind of going deeper. Part two, though, is I would work on market into your game. I would work on market. I mean, if you've made 1,100 calls, then obviously you've learned a thing or two about how to present yourself and how to conduct yourself and how to come across in a certain way, I would think. So I'm going to make the assumption that's the truth and that's the case. Well, then in that case, take that same skill set you've developed and start having conversations with brokers. Hey, I'm so-and-so. I'm the founder of ABC Group.
Quick comment.
Yeah, sure. Let it rip. Go ahead.
So about the brokers, actually, today I did a cold call and I reached out to an owner who was older, typical kind of seller. And I cold called him, but he was telling me it's on market. So is it unethical to go behind the broker's back if I, found a loophole to talk directly to the owner?
It could be a breach of contract from the side of the seller. If he tells you to go through his broker and you violate his request, then arguably, I mean, I'm not a lawyer, okay? So like, let me just be clear. But, I'd have to know more to like definitively say, oh yeah, of course that's illegal, or it's not. Like, do I think you're going to spend 20 years in prison for, contacting a seller directly? No. Okay. Is it going to be terrible for you? Probably not. But at the same time, I'm not a lawyer, so what do I know? The more important thing though, is that's actually a good sign. Funny enough, the Nebraska deal I did to get started, I don't know if you know my story. I won't go into it right now, but my first deal was a mobile home park in Nebraska.
I love your story.
Cheers, man. The way that started was we cold called the seller, and he said, hey, I have a broker. Contact the broker and let's see if we can't do something. And I met him 2 weeks later. First, I did a Zoom call, then met him. We horse traded a deal, yada, yada. That it happened. The deal closed. So not necessarily a bad thing if the guy has a broker. In fact, it shows intent. So that's positive. But I would say work the on market is going to be part two to what you're trying to do.
Awesome. Yeah. Thank you so much. I really appreciate it.
Because what you want at all phases, cheers, man. And what you want, and this just goes for you, but everybody as well, is at all parts of the deal making process, you want optionality. You always, 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 always want options. Why wouldn't you? You always do. So I want on-market deal flow. I want off-market deal flow. When I'm talking about on-market deal flow, I want to look at the stuff on BizBuySell and BizQuest and all the basic websites. But then I also want to speak with those brokers and get to know them on a first name basis and see if they have anything that's coming in the next couple of weeks or months, right? They may have a pocket listing. What's a pocket listing? It's a deal that's a little too good for BizBuySell. So we're going to keep it in our back pocket and only give it to select buyers that make a good reputation or a good first impression, or that I already know. So I have a relationship with these more qualified buyers, right? So, it's about having as many different, like, here's the thing, it's kind of like fishing, but there's no rules about how many lines you can cast. It's not like, oh, you can only fish with one pole at a time. No, you can fish with nets. You can fish with nets. As long as we're not breaking the law, there's nothing that says you can't fish with multiple poles at the same time. So on market, off market, and working as many different channels as you possibly can is going to give you the best options. And we always want options. I digress. Good stuff. Cheers. I see that some of you are using the hand raise feature. If you have a question, use that. I candidly don't even know where it is, but hopefully somebody can help you out in the chat if you're trying to ask a question. We have Henry D, who is up next. Henry D, if you're there, let her rip. And how's it going, partner?
Oh, well, thanks for doing this, Jason. I had a question, something I've encountered interesting over the last couple of weeks, and I was curious your thoughts on it because I did go read the new standard operating procedure yesterday for the SBA. So I've come across a selection of SBA lenders. So I've got a little detail, a transaction structured as 60-40 deal. We're looking at about a 1.8 DSCR. And with the structure on that, it puts the SBA financing, under $1 million required after the equity injection that subordinates seller note. But I've got a bunch of these lenders who are claiming that I need a net worth in the mid to high six figures to qualify to finance this. I was curious if I'd missed something in that operating procedure, because I read it as if the business cash flows and you can make the equity injection, you're good.
Yeah, I'm so glad you asked this, Henry. Let's talk about SBA lenders. And look, here's the reality. There are SBA lenders. You know what? I'm going to do, can I do a screen share with a bunch of people on? I don't know. But screw it. I'll just make it simple. There are SBA lenders that stay right in a very clear box. I want you to be worth $250,000. I want you to make six figures a year. I want you to have a clean, cut haircut. They want everything in this very clear buy box. And if you're not there, then buzz off. What they do, though, is they act as if it's an SBA requirement that things be in this perfect little box. And it's not. You said it yourself. You read the SBA bylaws. Where does it say in the SBA bylaws? It's a rhetorical question, okay? It doesn't. But where does it say, and you're welcome to ask this to a few lenders to build your confidence, where does it say in the SBA rules and regs that I need to have $250,000 in net worth to get an SBA 7A loan? It's not. What they do is they take their bank precedent and they conflate what their bank wants with what the SBA requires. Two totally separate things. You have to understand, what is SBA finance? The process, really, it's you as the borrower going to an SBA lender who is then basically the broker that gets you access to the actual SBA, which is the government, effectively. The lender is the conduit. They're the middleman. They're the broker, and they are allowed to have their own set of rules that ABC Bank requires. But that doesn't mean that the SBA needs those things. What this tells me, Henry, is you're talking to SBA lenders that are not really what we want, right? I know from firsthand experience, directly and in people I've helped do deals, that there are lenders that do not have that requirement or even close. Back in 2020, I did my first SBA deal when my net worth was, no way it was six figures. I'll tell you that. It was paltry at the time. I had the mobile home park, but I still, if you own a real estate asset that you buy for 8 or 10 times earnings, you know that it doesn't kick off like 50 grand a month in cash flow or anything. So it's not like I had that. I was doing all right, but I wasn't knocking the bottom out. I didn't have multiple six figures of net worth. I had just done that mobile home park deal less than a year prior. And it was no problem. I got the deal financed. Now, did I get rejected along the way? Yes. Did I hear a lot of the same things that you're dealing with? Yes. Is that a reality? Yes. Do you need some thick skin in this process? Yes. Especially if you don't have, 7 figures liquid and all these kinds of crazy things. But what bothers me, and hopefully these SBA lenders haven't told you this, but what really bothers me isn't that lenders have higher standards or requirements. It is what it is. It's lenders are allowed to ask for what they want. But what chaps my behind is when they act as if it's an SBA requirement, when bullshit, excuse my French, but bullshit, it's XYZ Bank's requirement. Don't conflate the two, and they use their position of authority with their tie to make it act as if it's the same thing, and it's categorically not. It's just categorically not. So punchline for you, Henry, is you need more bank side, quote unquote, deal flow. You need more options with banks. And there are, look, I don't share my personal contacts with kind of the internet at large, and I don't know you on a personal basis. So I'm not comfortable going there, but I'll give you a hint. If you type in the top 100 SBA lenders, and this data is easily accessible where it shows the volume of each of the top 100 SBA lenders, and I think all of them, but certainly the top 100. If you pull up the top 100 SBA lenders, I can tell you that there are a handful of lenders that will be in the top 100 for 2023 or 2022 that play ball, that aren't going to give you all that mashugana. So if you just go through that process and connect with those lenders, there are a handful in that list that will not ask for the crazy stuff you're talking about.
All right, I appreciate it. Yeah, I pulled that list. It's 1,528 lenders in the country.
There you go. See, it's government. One thing that's nice about, kind of the these government lists is they basically have a requirement to be quote unquote transparent with their information. So, do with that as you will. But the punchline with this is it is publicly accessible data. There are lenders in the top 100 that will shoot you straight and not give you all that mashugana. Excuse the French prior, but it really is one of those where so many people get this totally jaded misconception about what the SBA lending process is because they call one lender and one lender gives them this kind of smokescreen half answer. You have to understand the business development officer at an SBA lending group or the VP of SBA lending, as they're often called, that's a salesperson. The end. It's a salesperson. I don't care what they tell you. Their job is to produce volume for their bank. That's what they do. And it's nothing against salespeople. I mean, sales is life. I'm not critical of salespeople. What I am critical of is when salespeople use questionable, if not slimy tactics to make it seem as if they only have one option and that they're that only option. And they're standing on the shoulders of something that's totally BS. That's what really chaps my behind. So anyways, I digress. Anything else, Henry D, before we go to Mr. Hussein?
Nope, that works. I appreciate it greatly.
Cheers. Best of luck. Keep me posted. Mr. Hussein, how you doing, sir?
I'm well. Thank you for your time. I had two questions. One of them being, I'm located in Canada. I run a marketing company where I represent about 58 law firms and I give them cases. My first question is, where would you go to actually find financing in a country like Canada? And then secondly, when you do acquire a company, because I have the staff and the individuals and the people, ideally I wanted to think of maybe once I buy the firm, terminate or remove majority of the infrastructure that the old company built. How difficult is that, or what type of liability come about it? Just curious.
Yeah, sure. Let me take your second question first and then work into your first because I have a little bit more to say on the second. I have done what you're describing, where I bought a business, gutted it, rebranded it, slapped my logo on it, all of that. It will come with some turbulence. Just know, I mean, there will be turbulent times. Now, if you buy it at the right multiple, if you're well enough capitalized, and if you're in a position to go into that situation eyes wide open, then hey, it's par for the course, and I'm going to do what I'm going to do. Just make sure if you're going to do that, that there's enough that's intrinsically valuable. Customer lists, customer relationships. I don't know your line of business, and I won't kind of go too deep down that rabbit hole, but you know what I mean. Like there's enough infrastructure that you're not terminating that you see a usable, translatable value to make it worth the debt you're likely going to incur to do this thing.
I put on my Halloween dress.
And that moment in time reminds us that we should mute ourselves. Thank you, Mr. Bailey, or Miss Bailey, rather, for that. Beautiful little toy of the baby, but nevertheless, mute so that we have a good quality stream. Look, that's the punchline. Just make sure that you have enough value there so that you don't shoot yourself in the foot. As for your first question, we've really doubled down with the consulting side of this business, which is obviously kind of what funds the back end of kind of what this is, to where more and more, I'm really focused on working with American clients because each country, I've helped people do deals in Canada and Australia and Europe, but do I understand the precise debt markets in countries other than the US, like the US? No. Or Canada? No. The punchline is I just don't have as much of a say. Now, I know there's commercial lending there. My understanding is it's basically comprised in like 5 core lenders or core banks. Like there's lesser big banks, and that's kind of the players. And they're very much prudish or difficult to do business with, but that on certain terms, they can play ball, but you're going to need a lot of equity and a pretty damn good track record. What I would say though, okay, so there's that option, right? But beyond that, I actually know one individual comes to mind, but I'm familiar with a few folks who are what you would kind of call a private lender. What's a private lender? It's effectively anyone could be a private lender. You got $100,000 you're willing to lend to somebody where they're going to repay it over 5 years at 12% interest. That's a private lender, right? So basically what I'm talking about is high net worth individuals, family offices, or these kind of like boutique debt groups that operate they could be in New York and they're willing to lend across the pond too. That, I don't understand quite the cross-border stuff as well. I'm not going to pretend to be a cross-border expert. I'm not. But you get the premise. There are plenty of these kind of smaller, more boutique-like lending groups that are looking to deploy capital in the market, but obviously they want to have a risk-reward arbitrage that makes sense. So a lot of this, when you're talking about doing kind of an alternative financing, you really have to have your positioning tight. You have to be, it's kind of wild to think, but It's actually easier to get SBA debt, government debt, than it is to get debt that's operating in a true kind of capitalistic environment. Because just think about it. This is why the SBA, and I don't mean to dodge the question, I'll finish it, but like the reason the SBA is so great is because it's artificially propped up by the United States government. Like otherwise, market participants have to size up Mr. Hussein or anybody else and say, are we sure you're going to lend this money back with interest? And really like size them up, or any of us up. It's not just you, Mr. Hussein, of course, it's anybody, but they have to really size up the individual and make a credit decision. Whereas with the SBA, 75% of the loan has the government back guarantee. So even if you go crazy on a cocaine binge and never come back, well, we've got 75% of the equity built into the deal before we even have to think about it. The other 25% will collateralize with the trucks, the inventory, the machinery, the AR that the business has. And we let Guy go on his bender, we bankrupt him, but we get our stuff back and we do it again, right? So you need to be savvy. Go back, Mr. Hussein, but that's kind of the punchline.
Yeah, one last thing. In your consulting business, do you actually help Canadian entrepreneurs kind of stream through this, or is it just a SBA thing with the US?
Look, I have before. Do I actively market my services to folks out of the States? Not particularly. If you scour the marketplace, let me back up, okay? My full-time thing isn't consulting and doing this. Like, I know there's like people out there doing this as well. I know their names roughly, exactly what their value prop is. You probably know more if you've been looking than I do, candidly, right? The guy who interacts on the front end with people knows more than I do. So like, there may be a better option for you. I sincerely don't know. If you went out and looked around at all the options and you're like, I really want to do this and I really want someone to help me and I like Jason and we talked on a live stream once upon a time, and you call in and say like, yeah, I get it. His first thing is in the States, but I'm pretty savvy and he gave me some good thoughts and I'm going to do this. Would I take it on? Sure, we'll do it. But I just like to be really frank about what's my bread and butter. It's helping folks in the States, and the SBA platform is a lob toss I know how to navigate all day long. So there may be a better option for you out there. You may want to DIY it. I don't, that's your prerogative, but I have before. I just don't put my hat on as being, I'm a Canadian business buying specialist. That's BS. I love Canada, but it doesn't mean I'm a specialist at in that regard. Yeah. Cool. So you'll need to look for kind of creative option though. Is probably most likely, my spidey sense tells me from my experience that the creative options, the folks I've helped internationally have almost always done a deal in a more creative way where there's more seller finance involved, there's more equity involved, and the first lien note is lesser, and or it's a first lien seller finance note.
Is there people in the US that actually lend to Canadians, or?
I know of some that will lend cross borders. I just, as an American, I don't have firsthand knowledge working with them because I don't have to.
Yeah. No, that makes sense.
But
Thank you so much for your time, man. Appreciate it.
Yeah, they exist. I just, I like to speak from firsthand experience because I don't have to like intuit. Whereas with you, I have to intuit a little bit more, and that I just like to be clear that that's what I'm doing. So I digress. Okay. If you got a question, use the hand raise feature. Appreciate the question, the two questions there, Mr. Hussein. Okay, we have Mr. Mark Negley. Are you there, Mark?
Yeah. What's up, Jason?
How's it going, partner? How can I help you, man?
Good, man. So I'm new to this M&A thing, but I have experience in raising capital, and I was wondering if it's a good approach for a beginner to raise equity for other people's deals, to try to like get an equity position in their deals instead of purchasing something outright myself.
Yeah, look, certainly, everyone has to find their own place in the marketplace, right? For me, at this point, do I want to do that? No. But maybe back when I was 25, and it's not about age, but just like I remember where I was at that point. Maybe at that point, that would have been a nice on-ramp to get more experience. So who am I to judge it? It's really interesting. I don't want to blow up your business model because there's a lot of people that won't be on this stream that won't know this or believe this. Raising the equity for a good deal is arguably the easiest part, in my experience. But a lot of people don't believe that one. A lot of people think that raising the equity is like speaking Taiwanese when you grew up in Santa Barbara. It looks like the 805 number. I don't know if you're from there, but once upon a time I lived in SoCal. Like, there aren't a lot of people in Santa Barbara that speak Taiwanese, if you happen to know what I'm talking about, or Los Angeles, let's just say. So to a lot of people, raising equity feels like speaking a foreign language in a crazy concept. So if there was somebody that was good at that, that would be a value prop. Like, I bet you there's probably a dozen people on this screen that would say, hey, Mark, if you found me 100,000 for my upcoming deal, of course I'd give you 5 or 10% of the equity. So yeah, I think there would be a lot of people that would do that. I also think it's true, just to be very transparent to everybody else, that the equity raise is fairly easy if, this is the key and the kicker, you make sure that the deal deserves it. A good deal is the source of attracting capital, period, hard stop, end of story. And so for you, Mark, as well, if you're going to raise equity in exchange for getting equity in the deal, part of, I think, what would help you be good at raising equity, though, of course, it sounds like you've done it, so I'm sure you probably know this and or have found another way to do it. But in my opinion, believing in the deal itself is the surefire best way to actually raise the equity for the thing, which would be useful for you because if your compensation is going to be equity, then you'd like to get equity in something you actually think is going to be valuable. So I guess it would work kind of harmoniously in that way. What you would need is somebody or a set of somebody's, sponsors, in other words, searchers that are actually out there buying businesses. But if you have that, if you have those connections and you want to raise equity for them, go get them. Who am I to say no? Yeah.
Yeah. Okay. Thank you. Appreciate it.
Absolutely. I think that's it on the questions. It seems like we have kind of a group here that wants to just be observational, which is just fine. I did have a few things I wanted to share, before we call, unless if we have questions. Actually, I see here in the chat we have one. Excuse me. Jason, can you talk a bit about partnering with an M&A expert? What would you post as a job description on LinkedIn or Indeed to recruit such an individual? Yeah, I'll talk about that real quick. And then actually, I see we have another question. Okay, an M&A expert. I mean, that's a really vague. I don't know if you have the ability to provide a little bit more commentary on what you're looking for. An M&A expert is vague because you have to understand, like, M&A is kind of a big umbrella, and within that, there's a lot of aspects. There's like the due diligence or the quality of earnings. In other words, there's the financial side of the M&A process. Figuring out if this business actually produces the profit that I think it does and that I want it to. There's the legal side of M&A, which is a different gravy. There's sell side, buy side with regards to kind of the brokering of an M&A deal, which is a different process. And then there's just somebody that kind of has a general, working knowledge. Look, if you just look at somebody who's been, and I see here, somebody who can lead the project from A to Z and avoid pitfalls to coordinate the whole process. I would look for, here's something, Eli. Look, I'm not the perfect guy to advise you on that because I'm that guy for my clients. So like, I don't help my clients find that guy because they found me and I'm that guy. So you're kind of asking you're asking somebody who hasn't had to go through that, but I'll be sincere and try to give you some help. So a few things. First piece of advice, look for somebody that has experience operating in the $1 to $10 million deal range space is my first piece of advice. Assuming that's where you're going to start, which it's very difficult to start above that. It's super competitive because the way a $50 million deal operates is categorically different than the way a $3 or $4 or $5 million deal operates. Like it's just a different, middle market which is what private equity groups kind of, that's where they play. And then beyond that, it's just a different gravy. So number one, I would look for somebody that has that expertise in the smaller deal range size, because it's a totally different kind of way of looking at the whole process. But then beyond that, LinkedIn Recruiter is the best way, in my opinion, to find anybody. LinkedIn Recruiter, you get your first month for free, and then you have to pay $100 a month. But if you use it well, that first month you'll get free, and you can get everything you need out of that. I would just put M&A, M and symbol A into the search query, and then I might put SMB, which is the small to mid-sized business little acronym, and then I think I would just start searching for people and having a whole bunch of conversations with them on, like, you're gonna have to send out a message and find a way to kind of force them in, or not force, but kind of motivate them to want to work with you. So I think that's what I would do, is just kind of the cold outreach. If you use Indeed, usually that's like, let me back up. I'm making the assumption that you want to give equity in exchange, that you're not going to be paying somebody $350 or $500 an hour. If you're looking to do that, then I guess you could just use Indeed or any other kind of recruiting platform and just pay, offer the rate that you're going to pay. But if you're going to use equity, then LinkedIn works really well. And then you pitch them on your premise and what your ambitions are and do that whole process. I have a ton of YouTube videos that have talked about building a deal team, kind of using those core strategies. So that content's kind of well and documented. Last thing I see you wrote here is, do you think it's impossible for someone with no prior experience on sales or management to acquire a business? Let me take on that first. If you don't have any sales experience or management experience, I wouldn't say you're a great fit to go buy a business. I mean, unless if you have some real tricks up your sleeve that you're not describing there. I'm not one of these guys that proclaims that like anybody should own a business. I mean, maybe like a little laundromat. I mean, it depends on what kind of business. Are we trying to buy a service business with 60 employees and multiple layers of management? Or are we trying to buy like 4 ATMs that we're calling a business? You know, like those are very different. Like, do I think you could own 4 ATMs or like a little laundromat? Sure. If you lack any sales or management experience, do I think it's wise to try to buy a $5 million, service business with 60 employees or something? No, I don't. I think you need some more life experience before you go after something like that, because you'll get eaten up if you like the marketplace is ruthless if you're not good enough. And I don't believe this kind of narrative that gets spewed online that like anybody can do anything. Well, yeah, anybody in theory can do anything if they've taken a lot of good steps to prepare themselves for that said challenge, So that's that. Do you know of any networking groups in Central Florida? I always recommend Toastmasters. It's maybe not like the highest, most exclusive networking group, but it's very affordable, and you'll build some good connections. And more importantly, you'll sharpen up your speaking skills, which is super useful in the context of buying a business, because how you talk and how you communicate really matters. Hopefully that helps you. Mark, did you have another question, or was that the hand raised from prior?
Yeah, it's a follow-up question to the my one before. Besides Toastmasters, like you just mentioned, like where else can I like network with people who are buying businesses and I can provide this service to?
Yeah. So you want to network with whom exactly?
Just like people who are buying businesses who I can raise money for without spending tens of thousands of dollars in a group.
I would say I've just recently gotten on Twitter, or X as it now is. Feel free to follow me, by the way, over there at JPR Biz, I think it is. If you look up Jason Paul Rogers, you'll find me. But I'll answer your question. Quick shameless plug, because I need a few followers over there, man. I'm dying. But the reason I joined after like 15 years of not being on Twitter is because the small to mid-sized business acquisition space is pretty active on Twitter. There's a lot of people that are engaging there, brokers, accountants, lawyers, buyers, searchers. Like it's just a pretty robust space. So if you like actually, Mark, if you just find me on Twitter and look at some of the people I'm following and start following them, like you'll start. I every day in my feed, I just see a bunch of people that have bought a bunch of businesses that are trying to buy their first business. It's just a very active space. So from a digital perspective, I would say that's probably the best community that's out there right now. It's pretty active. I would say otherwise, if you want to kind of network in higher end rooms, at some point, I think it's just a matter of paying $12 for a cup of coffee instead of 4 or 2. Like, there's places kind of close to where I am where, you can, dinner for 2 is going to be like $250. And then like, you can get like the $40, like breakfast for 2. And like, my point is, I'm trying to say is if you want to rub shoulders with folks that are kind of more active in kind of the higher echelons of doing stuff in the business world, like on average, they tend to spend time in country clubs and nice restaurants and nice hotels and, places that have kind of a $12 coffee. So I would say on average that those are going to be the places where you're going to find those folks.
Cool. Thank you.
Yeah, absolutely. Look, it looks like that was the extent of the questions, which actually is kind of nice, because I just wanted to talk about a few things that I've been working with a number of people lately that are going through this process. And there's a few core initial questions that I think everyone who wants to buy a business, which I'll assume everybody here is interested in buying a business. There's a few core questions I think everybody has to figure out for themselves pretty quickly. So I'll just talk about them real quick. The first big question is, what the heck are we going to buy? Like, no matter who you are, like, what are we going to buy? Like, what do we actually want to buy? And it's funny, but like people don't spend a lot of time thinking about that. They know they want the profit. They know they want the result. And that's great. Like, don't we all? We all want profit. We all want cash. We all want money. We all want wealth. Great. But what are we looking to buy that's going to get us there? Firstly, before we go any further, I think we have to have the conversation about buying something that has the core characteristics that make sense. What do I mean by that? Well, one sec. I'll talk about it like this, eh? Who here would want to buy a VHS video rental business in 2006? Is there anybody? Probably not, right? Probably not. And that's because Blockbuster, for those of you that recall, that are old enough to remember, Blockbuster very quickly after 2006 went bankrupt, and all the other movie rental businesses did as well, right? So We don't want to buy a business that's on death's doorway heading to the grave. Yet a lot of people don't even like think about this, which is crazy. Okay, so here's kind of the quick checklist I often recommend. We want a business that's going to be Amazon proof. Amazon's not going to come in the next few years and eat it up. It's AI proof, all right? That AI is not going to completely make obsolete in the next few years. That'd be nice. Let's buy a business that's going to do well in a recession. When times get tough, this business is still going to do okay. I think that's a good idea. Let's buy a business that's going to do well no matter who gets elected into office. That's probably a good idea. Let's buy a business in a local market that looks like it has legs. Let's not buy a business in a market that has a population decline every single decade. Makes sense. Let's buy a business preferably in a state that has favorable laws and rules and regs associated with business, and maybe that doesn't tax you like crazy. Probably another good idea. So like just foundationally, all things created equal, it's beneficial if we can buy a business with those kinds of characteristics. I mean, the only reason I've been able to do pretty well for myself when I started broke the better part of 5 years ago is because I ruthlessly committed to the things I'm talking about here. And it has nothing to do with tactics. It just has to do with thinking rationally about what are we going to actually buy. Beyond that, there's really then two paths you can proceed with. Path one is what I did. Path one is where you predetermine the industry you're going to buy a business in. And I actually found this whiteboard. I'm going to do this. Can you guys see the whiteboard, the screen? Yeah, is that a thumbs up, I think? Okay, like there's two core paths. Path one is pre-select industry ahead of time. This is what I did with plumbing and air. Path two is we are industry neutral. Hey, y'all are messing on my you're messing on my whiteboard, guys. Come on. Yeah, let's show some respect. We're industry neutral and we are opportunistic. All right. All things created equal, this path, if you lack a bit of experience, get that out of there. If you lack a little bit of experience, this path's a little easier because especially if you're younger and you're trying to establish credibility, you can more easily establish credibility here because you can become something of an expert on your given industry. This is what I did with plumbing and AC. Even though I wasn't a plumber or an air conditioning guy, I just got ruthlessly interested in knowing everything there was to know about it, and it made me a more sophisticated buyer. That said, this path over here, the drawback of path one is sometimes you have to be patient because you might not find a plumbing or an AC deal, for example, that's in your backyard that has all the right characteristics. This is why a lot of people like path two. All right, they like path two because path two, we can make progress fast. This is where we just slide on biz buy sell and we let it rip. I mean, we can just basically buy anything that we think is going to last the test of time. The problem with this is we can get ourselves in trouble a little faster over here in path two. All right, we can get ourselves in trouble a little faster because we're kind of looking all over the place for stuff, right? And if we're looking all over the place for stuff, then we might just, and I'm going to stop this now. We might just make a big mistake with what we're buying. So there's pros and cons to both, but at least let's make a decision. This is my recommendation. Let's make a decision about, are we going to hang our hat on industry and double down into it? Or are we going to be a more opportunistic buyer? This matters because at least now we know what we're looking for. And we can communicate clearly to lenders, to brokers, to investors, to anybody and everybody we're going to need to talk to in the coming months to get a deal done. We can have that conversation with a sense of clarity. Whereas, if I talk to a high net worth individual and maybe I need equity for my deal, or at least I think I might, and he asks what kind of businesses I'm looking for, and I can't even give him a straight answer. Where are you looking? What are you looking for? How big? How small? I don't know. Where's the credibility coming from there? Hey, you know what? Yeah, I've thought about that a lot. And actually, I'm looking for deals in this market for about this size. I prefer this kind of an industry. I want to make sure these businesses have these traits that I'm looking for. Now we're establishing credibility. Okay, the guy thinks or the gal thinks, oh, this person's thought about it. There's some savvy here. There's some brain waves moving between the earlobes there. This is a good thing, right? We want this. So that's big. That's the big one. Step one is let's let's think ahead of time about what we want to buy. Once we decide what our buy box is or what we want to buy, the second big one is how are we going to go about actually bringing this thing home? What I mean by this is accounting, legal, and the other facets of due diligence. Okay, this is going to be one of the biggest financial decisions we ever proceed with taking and making. Probably want to have some savvy and some expertise on the team to make sure it goes a certain way. And what a lot of people do is they don't think about this until they have the deal under contract. And then they have the deal under contract. And now they really don't know where to go. And so they start calling lawyers or accountants in a frenzy, or they start kind of making all these hocus pocus wild calls. Opportunistic lawyers and accountants emerge, and it's a good way to get huge white collar bills for questionable services in the due diligence process, right? So a couple of you may have seen my videos or the video I posted the other week about a law firm, Loeb and Loeb, that invoiced me $20,000 back in 2019 to do an entity formation. Okay, it's crazy. You don't need to do that. That's insanity. But I share that because if you think they're comfortable charging you $20,000 to form an entity for you, what do you think they're willing to do when you got a deal hot on the burner and they see you need all this help to bring this thing home? You're going to get fleeced. So if you don't have a plan before you find a deal, you're going to get burned. And I've seen people get burned in a pretty meaningful way. And I've seen people have to stop searching for deals because they cozied up to a law firm. They didn't understand what they were doing. They didn't really monitor this process or think about this process properly. And then they got invoiced for 20 or 30 or 40 grand or whatever the hell it was. And that obviously was a lot of money for them. And it kicked them in the ass, and they had to go get a job and pay off these sins that they accrued over the next 12 months, whatever. It's like really kind of terrible. So let's avoid that. Once we do those things, then we get to go out and hunt, and we look for really just 3 core things. One sec. Here we go. There's just 3 core things we need to get a deal done. I mean, there's just 3 core facets of a deal. Okay. The first is the deal flow itself. The next is the debt, like SBA debt. And then the last is the equity. The equity, which can be, third party investment. It can be seller finance on hold or your own cash. Doesn't have to be your own cash, but it can be. Once we kind of know what we're looking to buy, and once we effectively figure out how we're going to go about handling the accounting and the legal piece, which we can do, we can bring on the accountant and the lawyer, by the way, with equity, or we can pay them cash. Both are viable strategies, and I talk about it a lot on YouTube. But like once we have these 2 things over here, number 1, what are we going to buy? Number 2, how are we going to handle accounting and legal, right? And we can either use cash or equity for this. I have a ton of YouTube content that talks about number 2. So this part, I have a ton of stuff talking about that. But like once we have these two things sorted, then we get to go to the core 3 facets of any deal. The deal itself, and then we have to make sure we have the debt and the equity to get the deal done. That's deal making in a very simple nutshell. Now, yes, you got to negotiate the thing and do the due diligence. I obviously understand that. So we could put kind of over here, we need due diligence, right? And we have, before that, we have to negotiate the deal. So like those factors are obviously there. And then of course, afterwards, we have to close and stabilize. So, right. So we have these 3 things that obviously also exist, but as far as like actually bringing the deal home, these are the things we need. And you'd be surprised, but The SBA, this part's easy. People think this is hard. This is government-backed money. Like, I've had a deal before where I was trying to get out of the deal and I had to convince the lender to pull out of the deal because my lawyer kind of made a mess up and we kind of had to rely on the lender. We did have to rely on the lender to kill the deal at a certain point without geeking into the details. There was a moment in time where the way we had to get out of the deal was to basically say that the lender wouldn't finance it. And I was telling the lender, let's not do the deal. And the lender's like, no, it's fine. Don't worry about those problems. It's good enough to finance. We're like, no, we insist. It's not good enough. Kill the deal. Okay, like I've had literally deals where the lender wants to do the deal more than me. So, I'm not going to get too political here, but the government knows how to, let's just say the government knows how to print money. Okay, that's not politically motivated, but it's true by definition. The government knows how to print money, so they'll print money for your deal. The equity, I was talking to Mark about this earlier, the equity and really the debt as well, both of these, if you find a good deal itself, then they both get attracted. Like it both becomes easier to source when you have a good deal itself. The reason, by the way, if you notice, this circle has three compartment or kind of parts to it. And if you notice that the deal itself is biggest, that's because it's the most important and it's what you should spend most of your time on. There's a reason it looks this way, and that's because this is by far the most important part. If you didn't focus any of your time on debt, and if you focused none of your time on equity, but you only focused on the deal, if you only focused here, then I can promise you, I don't know what promise, I mean, you have to work, but like your odds are very great that you're going to find the debt and the equity. Okay, you're going to find the debt and the equity because good debt and good equity get attracted to good deals. Money gets attracted to good deals. So if you focus the majority of your time on the deal itself, you will win. Of course, we need to negotiate the deal. We need to do good due diligence and make sure it's actually the thing we want. And then ultimately we have to stabilize it. We'll close it and then stabilize it. But in a nutshell, this is really what we're looking for in the deal-making process. I see we have a couple of questions and then we're getting a little close to time. If you wanted to screenshot this or whatever, take a quick picture. I'll give you a couple of seconds. And then we got a couple of questions and then we'll wrap. Okay, so I'm going to kill this in about 3, 2, 1. All right, close the whiteboard. So I see a couple of questions. Do most lenders who work with SBA shy away from loans that are smaller than 500K? Short answer, some do, some don't. Also, do they always require a down payment of 5, 10, or 20%? No. Well, those are three very different numbers. A lot of lenders are okay with 5% of the deal being in cash. The aggressive lenders are okay with 5% of the deal being in cash. Some will do 0, but a lot more will do 5% in cash. And then the other 5% is seller finance on hold for 2 or more years. And then that's the 10% equity requirement. That's a pretty common structure. I'm contracted with a seller and about to speak with an SBA lender. I have raised 20% equity, but wanted to hold money for working capital. You're in a great spot. At least in theory, with that 20% equity, that's more than enough. And get the lender to provide a ton of working capital and get an SBA Express line of credit. Get an SBA Express line of credit. You can get many hundreds of thousands of dollars of working capital. I would keep that extra equity in your back pocket, by the way, Brian. I would keep, at most, contribute 10. And then keep the liquidity and make the post-close liquidity argument. Say, hey, it's better if I keep this liquidity in my operating account so that I can make sure I can make payroll so that I can pay my loan. So why don't I just give you 10%? Depending on how you negotiated the deal, you could have gotten that lower, but it sounds like you already negotiated with the seller, so I can't help you with that. But I can help you going forward. Why don't I just put 10% down? And then, from there, you provide the working capital and you give me an express loan. You may want to reach out, Brian. I could probably, for the price I'll charge, I could probably save you a lot more than that, but I'll let you be the judge. But you're in a good spot. Keep on swinging, and I digress. Okay. Anthony asks, and I see, Cass, you have a question as well, but Anthony asks, when you have the accountant and lawyer for equity, let's say first few deals you're looking at don't work out, won't they want to get paid after their service? When you have the accountant and lawyer for equity, let's say the first few deals, yeah. Short answer is they might. I mean, Yeah, like, that's almost like saying like, well, what happens if you do a bad deal and you can't pay your loan? It's like, well, yeah, is it bad? Yeah, probably. I don't know from personal experience, but it's better to win than it is to lose. Look, the punchline is if you do your first few deals, what the accountant and the lawyer is going to be interested in is the equity value of the enterprise that they have an equity position in. And that's the way I always recommend selling this to partners if you bring them on for equity is I don't recommend you make promises that we're going to make distributions of X amount or Y amount in some period of time. Eventually, sure, but let's just call a spade for a minute. The way you create wealth, and I define wealth as being 8 figures or more in net worth. I'm after more than that, but let's just agree that 8 figures or more in net worth is a nice starting point, right? The way you're going to get to 8 figures in net worth in this decade is by exiting. It's selling your portfolio. It's not from the cash flow in most cases. I mean, if you build a huge business, then yes, but the fastest way to actually create 8 figures in net worth is by selling the business to a private equity group or a strategic buyer. That's the fastest way to create a lot of money. And again, I define a lot of money as being 8 figures or more. So your accountant and your lawyer should make sure that they're focused on that, not getting a $1,100 a month check in the mail. This isn't mailbox money for a multifamily, a fourplex. All right. If you want mailbox money, invest in a fourplex. Buying and there's no disrespect to that, by the way. I'm not talking poorly about that, but it's a categorically different investment. That's kind of like an angel investor investing in a seed round in Silicon Valley, like wondering where their monthly distribution check is. It's like, you're kind of in the wrong ballpark, buddy. Like this is Silicon Valley. Like we're trying to design a rocket that's going to be able to go to Pluto. Like we're not worried about distributing $1,100 a month in distribution. So you need to communicate accordingly to your accountant and lawyer so that they have the right expectations about what needs to be done. So that's my real advice from you. Dennis says, can I share a personal experience? Yeah, use the hand raise thing, Dennis, and we'll get to you in a minute and we can talk to you. Okay. Mr. Williams, you've got your hand raised. We're going to do a last 1 or 2 questions here, last kind of couple talking points, and then we're going to roll. But Mr. Williams, I see your hands raised. How can I help you, partner?
Hey Jason, how you doing?
Doing good, partner. How are you?
Good. Yeah, so quick question. So I'm 23. I'm based out of Michigan, and I was looking at different industries. I've built a board in the past. As I was drinking the Kool-Aid or whatever. Then I switched to your methodology as I started learning your process about 2 years ago. I finally have gotten to the position to where I can start building a new deal team and go into a different industry, which is probably will be HVAC or towing. And so my question to you is, how was it, after buying the business? I know you talk about, giving that speech to the employees and whatnot, but how was it actually in that 60 days after, that buying that business? How was that process for you?
I'll always be honest with you. You've been following for a minute, so you hopefully know I'm not here to blow smoke. The first
Correct. Yeah.
day after I bought my business was absolutely terrible. Like some of the worst 60 days of my life. And it's because I made a fundamental mistake. I categorically messed up the working capital situation in the relationship between aged receivables and aged payables. What's aged receivables and aged payables? We'll call it AR and AP. AR, aged receivables, are monies that you're owed for services you've already performed. Aged payables are monies that you owe for goods you've already used, right? Long and the short of it is I was running out of cash, not because the business was bad, but because the amount of working capital I had originally was not sufficient for the amount of time it took for me to collect my monies that I was now generating. I made a big whoopsie. So I remember it was the holiday period and I had to give out Christmas bonuses to the new employees because, they just expected it. And I had these red envelopes I was handing out to all the employees. And I was telling them, because you have to, like, hey, we're gonna crush it, we're gonna win, we're gonna do all these great things, it's gonna be amazing. And they were liking it, they're getting money. It was a holiday season, who wouldn't be happy, right? But meanwhile, I knew in the back of my mind, I had like next Friday's payroll covered. And then the week after that was a complete mystery as far as how I was going to make that happen. Behind the scenes, what I had going on was I called up the lender. So the backstory, and I won't get into the details, but I will share the punchline, was I wanted 200,000 in cash that the lender was going to supply at closing. And they wanted to give me 140. And I had a $2 million commitment letter to do this deal, which for me, a $2 million commitment letter from the lender was a big deal. 2 million that they were going to give me. I was like, that was a big deal for me at the time. But I didn't believe the working capital was enough. So I said, no, I'm going to need 200. And I remember I said that on a Friday, and they came back the following Monday and they said, okay, we'll give you 200. So I was like, oh, great. So anyways, about 60 days later, I call up the lender. I say, hey, good news, bad news. Good news is I held out for the 200 instead of the 140 you wanted to send me into the battle with. Bad news is we were both wrong. I needed more like 400 or 350. At least we went with my number, but we're going to have to do something. Otherwise, you're going to own plumbing trucks in a few weeks. And, true story. I got funded. Actually, if you go to my YouTube community little thing, you can see I posted December 25th.
I remember seeing it.
Yeah, I didn't give the whole story at the time because I didn't want my employees to realize like I took over and almost bankrupted the damn thing within like a month. But so I stayed slightly more coy. But the reality is that was a huge moment for me because it right-sided the ship. After that problem was sorted, everything was generally just fine, Cass. It was okay. I just made one huge mistake that almost bankrupted me before I even got started. Other than that, it was okay. I bought a pretty good business. It was nothing wrong with the business. I just made a categorical mistake, which is part of the reason I like doing live streams and helping clients and all this fun stuff, is because I know from a firsthand basis that whatever your problems you're used to having as an individual are, add 2 or 3 zeros to them, and that's the size of your problems as a business owner that buys a 7-figure business. Now, you can also make a hell of a lot of money more fast, or more quickly, but your problems, if you screw up, the screw-ups are much bigger, and I found that out firsthand. So that's the honest answer of how it was. It was a little rough.
Gotcha. Now I do have one more question, and then I don't want to be long-winded or take up too much time. So I currently work in sales, and I just switched to a new sales company. I now sell software. I'm questioning, should I continue to do that and follow along this path? Because my whole goal is to do an acquisition by the probably end of this year or early 2025. Should I just stack money on the side, like 10 to 15 grand? I know you said 15 is pretty much the sweet spot. Or 30,000 because I'd like to 100% get into your coaching. What's your perspective on that as someone who is, really serious and looking to go about things?
Let me be clear. 6 figures is the minimum preferable sweet spot. I wouldn't say 15 grand.
Gotcha.
15 grand is not a sweet spot. 15 grand is just enough to like grind it out if you're really scrappy. All right.
Gotcha.
So let's be clear, but that's okay. Like I barely had 15 grand when I started. In fact, by the time I was going, I had less than, but I made it work. So you can make it work. I consider 15 grand to be broke, which that's no disrespect. Yeah. I would say that's generally like, I'll put it this way. If I had 15 grand in my business and then didn't put any money in within a day, I'd be broke. So for me, it's basically broke. But anyways, to answer your question, I think sales is good. Number one, I think sales is good. Sales is a great job to have because it teaches you a lot of the important things, having difficult conversations, working through objections, how to put the charm on, how to bob and weave in a social environment. Those are all really important skills when you own a business or may have to manage situations and people. As far as your goal of buying a business this year, I think I know it's possible. As far as should you try to stack cash? Yes, absolutely, undeniably. As a young guy, though, you also have to look at the risk v reward profile of the thing. And being a young guy in his 20s, you'll never, I'm 32 now, and my life's different now. I've got a gal, I've got a couple of goofy dogs. I've got people that rely on me, and I'm sure in another 10 years, my life will be radically different. So, in 10 years from now, Cass, I can pretty much guarantee you, your life will be different. And in general, the older you get, the harder it is to take big risks. I'm so glad I took big risks in my 20s and didn't wait, because I think it would have been a lot harder to take the kinds of risks I took back in my 20s now. So I would say all things created equal, you can play to win in your 20s, lose, and still win in the end. So I would lean towards ambition, but yeah, stack cash and do sales. I think that's a winning combination.
Gotcha. Okay. Yeah, that's my motto now. You can ask Colin Barrymore. He's on here now. My whole thing is, grind now, grind now, short-term sacrifice for long-term gain. So yeah.
And I totally agree, man. And I respect I respect, the ambition and hope that it's a great year for you. I think it has the potential to be. Cheers, man.
I appreciate that. Well, hopefully you have a great year as well. Thanks, Jason.
Thanks, man. Cheers. And then I'm going to wrap. I do have one last one that I'll talk about. Jason, you didn't have 15 grand in your save. You didn't have 15 grand in your savings. You're right. I probably had less. Didn't the bank have issues that you didn't have any money? Can you elaborate on this? Yeah, a lot of banks didn't want to do business with me, but I forget who I was talking to, but I was talking to somebody about an SBA lender that was messing with them because they were asking for him to have 6 figures in net worth. Remember prior, Jay, we talked about SBA requirements versus bank requirements. The SBA has basically no requirements about whether or not you have money. They have like none. It's government. They're like, sure, if your deal cash flows, we'll give you the money. Banks have problems, but I found a bank that was aggressive. And that's a huge part of this. I'll give a couple of quick pointers before we wrap. There's a few really important variables that help you succeed in buying a business. Number one is an aggressive lender. You want, unless you got a lot of money to your name, in which case this doesn't really matter. But if you're scrapping it out, you need an aggressive lender. You want a lender that solves for yes. That's really important. The other thing you need is they said they call it post-closing liquidity. Yeah, they provide the working capital. Look, I know what you're saying, Jay. I'll finish with this point, actually. You're right, Jay. A lot of lenders will kick you out of the room. I got a lot of rejections. Let me be super clear. I remember I had a list of like 10 banks that was going to work with me. And by the end, I had one that was still going to do a deal that was okay to do a deal. Only one was willing when it all lined up. So I found one lender that was aggressive enough. One. And you know what? I think that's a good place to leave it. It's like you only need one to work. That's what you need. So on that, look, I appreciate y'all. If you want more information, go to jasonpaulrogers.com. You can follow me on social media. There's tons of stuff on YouTube. I don't know how long y'all have been following me or not, but you're more than welcome to follow me there. There's a lot of stuff, and you can go from the early days and watch my videos from when I was broke and all that jazz and see the whole story from the beginning. So feel free to watch those, and hopefully it can inspire you to have a big year in 2024. I wish you all the best, sincerely. And if you want more information, jasonpaulrogers.com. Night, y'all. Take care. Bye-bye.
Thank you, Jason.
Cheers, man. Bye-bye.